Hello traders, welcome to the channel. Hope you had a great weekend. Want to share with you two ETFs I'm keeping an eye on. This is for educational purpose only. This is not financial advice. So as you can see, if we look at the SPY here, it has formed a lower high. So we have officially created or formed a downtrend. So this five, six, 575, 576 area is a confirmed resistance area, which is also about the 200 moving average. So if we look at the other indices, they're pretty much the same. QQQ, downtrend, DIA. DIA looks slightly better than the other two. IWM. IWM is in a downtrend for sure. If we come back to the SPY for a second though, so the only hope for the bulls is that maybe there's a chance that the price action will find some support near this recent low here at about 550. If not, if it breaks down through that, then it will come down to maybe this price area, 540. That will be a big drop. We'll see how the price action takes place. The two ETFs I'm keeping an eye on. First one is YANG. This is a inverse ETF of China stocks. So if I zoom in on this chart, you can see that it has formed this upper trend in the short term. And then if we come to, let me delete this. If we come to the weekly trend, weekly chart, zoom out a little bit, you can see that it had big drops down, and then now it's forming smaller candles. With the ETF, I mean, with the tariff that's going to take place in a couple of days. So that's probably going to make this a good candidate for a long trade. If we come to look at the FXI, that's the Chinese stock long ETF. We can see that this one is somewhat in a downtrend. So that just confirms that the YANG for the short-term uptrend is valid. But then this one has some resistance here near the 4760 area, which is also, as you can see, which is also the 50 MA price area. So when you do trade this one, make sure you watch those price resistance. The other one I have is UNG. That's the natural gas ETF. While the market was going down, it was following the market going down. But interestingly, it seems to have found support near the 50 MA, and the 50 MA area, the $20 range area, that's also the previous high and then this low here. So, and if we draw a trend line, it looks like it break the downtrend line in the short term. So it depends on how it goes. This may be a short-term trade, and if we wait for a signal in this green candle here, somewhere in the middle, that's about 3%, 4% risk. If we get in from here, somewhere in the middle, we can see that the first target is probably going to be somewhere here, $22.65. That's 8%. Or if it can go up higher more, it's about 15% potential. So that's a good risk reward ratio. And then, even though the market has formed a downtrend, does not mean the bulls need to just take cover. You can always look at the inverse ETFs. Do a Google search of inverse ETFs list. You can find all those inverse ETFs, you can do the 1x, 2x, or even 3x, but just be very cautious because this market right now is very volatile. It could be, opening up and in the green and then closing in the red, or open in the red and close in the green. So it's a lot of movements within the day. So be very cautious when you get in. Try to make sure that you don't put yourself in a position that you can lose a lot of money. So that's it for today. Hope you find some value in this video. I'll talk to you later. Okay, bye bye.